Hey, what's up, guys? I don't know why I'm doing this. I just wanted to chat, uh, just go over thoughts, things that happen in the market, and kind of go from there, right? Really, AMD is doing exactly what I think it was supposed to do, right? I think we broke down off of this major footprint candle, as I like to call them, very high volume shooting star, and we are breaking down on low volume, right? Now, as you guys know, things don't always have to move on high volume as they're, if a campaign was already established, which I think it was here. So the move down, right, is really just indicative of what already happened here. The selling and the rewash of levels, right, the accumulation at the lower range here just to distribute the highs. Volume remained high at these highs here. So I already mentioned I think this was selling here, especially considering the spread of the candles with the high volume, right? There was not really large spread. And then the largest spread candle actually was the highest volume of the sell candle, right? Where I think they really kind of just didn't really care about hiding what their objective was. I mean, that's the reason volume and price reign supreme in my opinion. You can't mask everything. So really large footprint candle here, and we sold on low volume, leading back down to 185. I know a couple of you guys took the 185 calls, which I didn't say was a bad idea, just not something I was interested in. But congrats if you did that. I'm still looking for a bounce up to 205. But remember, we have a pretty big thing coming on Monday. We have NVIDIA. They have a conference. Really good excuse, in my opinion, for NVIDIA to get rugged. Now, NVIDIA has a little bit more room to kind of take off some of the excess fluff that's been given to it. I mean, that's trading at what, 900 bucks, 800 bucks in that range. We'll look at it in a second. Whereas AMD doesn't necessarily have that much room to give just yet. So if NVIDIA has a bad day, right, or a bad conference, there's a reason for AMD, which is already in distribution, to unload supply under the guise of news, right? This could get ugly. So it doesn't have to bounce to 205. I would prefer that. But just something to think about, that this doesn't have to go to 205 here, right? If we look at this really quickly with some fresh drawings, this gap is still an area that bears would want to hold now that they got progress off of this level, right? We always talk about progression, or gap was made here. We broke down, created a new bear gap, which is this red line here. Okay, we'll just get rid of this one. And then obviously we broke down, hit 185, and now we're pushing back up, right? If we were just being logical here, sellers would want to protect this area that they just regained, right? We sold through it after this filled, bounced. Now we're basically testing this level one more time. So this would be a logical area for it to first establish a potential lower high. If it breaks through, 205 is a great spot as well. But I might be willing to start something here if I'm being honest with the potential for some kind of major accelerator. If Nvidia does something crazy on Monday that really gives a reasoning for a sell-off, AMD could really trigger a massive move, right? For that move that we're thinking back down under 185. Once we're under 185, I did mention I'm going to be pretty aggressive and look to get into these 165s. But yeah, pretty interesting. Just wanted to go over that really quickly. I think a lot of people are confused as well with NVIDIA here, not understanding what's happening in the semi kind of industry. Let's recalibrate this level, but really understanding what's happening here. I think there's a big sell-off coming. People, I think this is a flag. But once again, right, we had this footprint candle here. We broke down, kind of retested the gap, which was a really beautiful gap defense in my opinion. Similar to AMD off that 185 level. And really it's bouncing back up. And it's giving what I think people are thinking is a flag just because SMCI did it. But you got to remember SMCI only did theirs, right? Because of what? Right? Remember we're talking about back here. Sold down, pushed up, flagged. Why did this flag happen, and what caused this flag to move? Does anyone know? Right? It was the S&P inclusion. Okay, we had 2 days where it broke out, S&P inclusion, and then obviously we're in this new range here, pretty low volume, and the only highest volume candle of this pretty much this entire week here is what? A sell-off candle that is breaking this little new range higher low trend line, right? SMCI doesn't look good. SMCI, in my opinion, looks good for a visit back down to 1020 and then potentially break into this new gap here that was just created at 927. So I think this could be the fall. I think this is really going to be the fall here. I think a lot of people are, like I said, are going to compare this to SMCI without really giving it context of what happened, and are going to trade this as a flag and get caught. That's just my personal opinion. But I think this is actually just, right, a lower high, lower high, and I think this actually sells down to 823. I just want to put it on people's radar. I know a lot of people like trading NVIDIA versus AMD. I mean, shit, I don't blame you. This thing moves a ton of points any day it sells, and there's a lot of room to give this for a sell-off. So just wanted to put that on everybody's radar, kind of what I'm looking at next week. NVIDIA and AMD, definitely a focus for me. SMCI as well. This is just expensive, right? Premiums are juiced here. So NVIDIA is pretty expensive as well. But yeah, I just want to give my thoughts. I don't think this is a flag at all. And I think you're going to see a lot of that on Twitter next week. If you want to fade me, by all means, do so. But I just don't think it's a flag. I think context is important, kind of understanding the blueprint of SMCI and what happened there and why it really recovered from that parabolic short that ended up happening here and why did it bounce, right? And now, even though it bounced, why haven't we seen a really large higher high, right? And why aren't we sustaining that, and why has volume been low? And then the one opportunity for it to crack, it cracks, right? So it's pretty interesting. And I think we do see some of this, and I've been saying it for a while now. We just had to be patient for it. I think this is going to be a big move, and I don't want to miss this. But yeah, just wanted to give my thoughts on those. QQQ, my chart's going to look a little crazy with all the lines here, but what did we end up doing here is pretty interesting, right? We ended up kind of testing this 433.71 low. If chips end up having a pretty, bad week, I can for sure see this trickling down to 425.70. I'm always a little bit weary of potential gap traps here. I mean, we should always be, right? If we take a look here, nice little gap into that zone. We had a wick down and then close back above. There might be potential here for a push to 437.66. If we take a look here, I actually might pull it up on the screen so you guys don't think I'm crazy. Remember, SPY had those crazy dark pool prints I posted today. This didn't really have those. It had one signature bear print, right? So sellers lining up asks to sell their premium or sell shares or whatever. It was at 438.9. It was only one print. So it's actually somewhere up here, right? So pretty much at this old breakdown zone where this gap was, right? At this kind of this consolidated low. I'll pull it up on a 15. Make more sense for you guys, right? We were looking for this area to kind of hold as support. This was from Thursday, and then obviously we gapped down today, bounced a lower high, retested previous day low, and then sold off again. So there is potential for this to trap and push back up to that level, but that's why I'm more concerned with chips. I think there could be a potential for a short here if semis just don't look good and then semis end up kind of collapsing. QQQ could be a really good short, right? If we end up breaking into this gap here, that's about 8 points, man. That's a really good opportunity. If not, though, right, we can always look elsewhere, right? And this is going to tie me into my second point, which is going to be Apple. If we end up seeing some kind of trap on QQQ and you don't really want to trade the long side, and I don't blame you, Qs have almost lost their luster in this range, guys. Like, it's pretty tricky, right? We haven't really broken this range. If you guys can see, we've kind of like had a bounce here. Well, it's not letting me do my thing. Like a bounce, pull back into the 21, bounce, pull back into like the 21, or just the low of this range, bounce, pull back, bounce, pull back, right? I expect another bounce, and this would probably be our lower high, and then maybe we could see something like this. But Qs is starting to look distributive as well. It's all kind of coming to fruition, in my opinion, and of course, semis are the leaders here. Risk reward would make sense for a long here, but like I said, I would rather just wait and be patient. That's ideally why I've been waiting for that bounce on AMD to 205. I kind of want to see some strength, obviously some low volume strength, but just something where buyers step in and push this up would be very, very nice, and give that opportunity for a 205 short on AMD. But if it doesn't happen, right, I've come prepared for both sides. But if Qs do show some strength, it's probably going to be led by Apple here. Really good close. I know a lot of you guys were looking at this, so we'll look into this really quick. Apple's an interesting one. I still think that this is going to lead that dispersion crowd right out of the woodworks, if you will, right? And basically, meaning semi is the thing that led the thing up. When I say the thing, right, like the NASDAQ, pretty much the overall market, I think we're going to see the names that were lagging, right, in the Mag 7 really start to pick up the slack and then them lead with semis selling off. It'll kind of create this balanced kind of notion across the market. The S&P and or the NASDAQ won't sell off too drastically because these names will be pulling, whereas the other names that led will be kind of dragging it down. So we'll have some kind of balanced out, proportionate move across the indices. This will kind of stop the market from capitulating, right? Especially kind of if you have it in the back of your mind going into an election year. This will rebalance a lot of stuff, and then I'm sure semis will catch at a certain point, and these will stagnate, and then we'll have sector rotation, yada, yada, yada. But this is a focal point for me. Right, we talked about, what day was this? Friday, having this crazy rejection candle. It looked like a gap trap. Overall, just a candle trap that should have rejected down and sold off pretty harshly. Of course, wasn't much volume behind it, but we did end up opening above, back into this gap, right? We held for 1, 2, right? The following day here on Wednesday, which is usually higher low of the week, as you guys know, we had an open here. We ended up pushing up a little bit and then sold under, closed underneath, right? Which isn't the ideal close, but it's technically still above this low here, and volume stayed really low, right? So this is technically still holding a higher low. Not the close you would have wanted, but it's all good. Following morning, we open up in this level again. We end up kind of pushing lower, pushing higher, and then closing right in the middle with another doji. You guys can see, right? Like this is what I have charted here is pretty accurate. This is a huge level, right, to try to hold for bulls and then try to push it under for bears. So you're seeing that in the form of the daily candles here. Tightening the spread as well, so we're bound to see some kind of expansion. I've talked about it multiple times that we still have the 180 retest, which makes the most sense, but also verifiable data, right, that they're lining up orders to sell here. And I think this is just a short-term accumulation, and then we'll have that markup. Typically through the use of news, perfect catalyst here with FOMC next week, and then obviously continuation would be April 25th. Or a sell-off, right? If we end up kind of marking all the way up and filling these gaps here, hey, we could get an April 24th, 25th, and then post after that, right? Kind of sell-off. Who knows? We got to just be kind of frosty on our toes and just see what happens here. But I like the consolidation here. And then obviously we opened below, right? Or we actually, yeah, we opened here, pulled down, and then closed back above. I know the candle is red. It's just because I use hollow. If I had, different colors here, just do like green or something like that. We'll make this red, just like a traditional candle, right? You guys will see. This should have been a green candle, but hollow, right? It's just technically opened and closed below the previous open and closed, so that's why it's red. But yeah, this was a nice spot, right? It kind of broke under a little bit, kind of pushed and retested the old highs here, and that first initial consolidation accumulation area that I was talking about with the 3 lower lows, and created a higher low, right? This is still technically a higher low. We got to think about that. And this range didn't break under, didn't really push under. We had tons of volume come in, higher volume than we saw on this crazy day back here. That's so important. I know today was the rebalance. Remember I talked about they can do this earlier, right, which is here. And isn't it funny that we have 3 lower low consolidation here, and then we have this tight consolidation here, right? And then we have the rebalance date with another high volume day. It's a little bit weird for me. I think people kind of sold here or bought here. It pulled down, rebought here on low volume, right? Kind of using the potential bearish. And if you guys saw, right, there was a lot of bearish sentiment using that to obviously get fills here with people going short and piling in short, maybe overextending for the 165 pull, right? We pushed up, kind of held here. People were looking for shorts on this, I'm assuming. Overall, I think this is a great area for big money to accumulate, right? And then get a move back up. So, yeah, it's pretty crazy, right? The 2 days here, some of the highest volume we've seen since the breakdown, which is very telling in my opinion. So this is a big focus for me. I just want to talk about this. Still, I'm interested on a 173.79 break, which would be the gap high. Big move over that pullback. I'll probably start on a breakout above, right? Especially if we get an aggressive expansion. I know you guys can see the daily wicks here, but it's not much of a move through, right? We kind of have like a 56-cent breakout. I would look for a little bit more than that. Obviously, as we trickle above, I'd be happy to start some. We've already rejected 1, 2, 3, 4, right? So 4 times on a daily candle, right? You got to assume that we're seeing some kind of absorption there. Admittedly, I haven't really been watching the tape, so I don't know how many orders are there passively or how much has been potentially absorbed. But you got to think 4 days in a row. Low volume, right? Not really seeing big sellers step in. And each order looks like it's getting matched, or else we wouldn't have this consolidation here. So this is essentially an absorption that's occurring off 173.79. So if we get another break of that level or tap or breakout, I'm for sure going to start some. And obviously, I did mention already kind of my game plan here. I would be looking for 185. Now, some people might be like, what the hell? Why are you taking 185, dude? We're just looking for 180. I want earnings exposure, right? I want FOMC exposure, and I want earnings exposure. So I think we could see a markup all the way to this unfilled gap. This is the only untested gap on Apple's chart, and I think this is what they're going for the accumulation. Should we sell off here? I have no idea. I'm not going to get into that. I don't care about anything else. I want to get earnings exposure. So I'm probably going to go like late May, early or maybe mid-May, 185 to 190 calls. I kind of like the 190s. They're a little bit out of the money from 4 points off where I think this can go to, but it's all good. These will still get a lot of value, right? I think we're going to see a lot of volume come in. And these should be able to, obviously gain a lot of value. So 190 calls for May should be perfect. More aggressive if you guys wanted to. We can take on a break over 173.79, probably take 180s for, I would say like 2 weeks out. Should be good enough. FOMC might be able to get us there. But this has got to be my favorite chart. Like 100%. If I'm going to long anything, it's Apple. I promise, guys, I'm not going to get distracted by anything else. I posted in the chat that 2 charts probably I think are going to make my year. I think it's going to be Apple, and I think it's going to be AMD. So, I'm locking in. Like, this is 100% what I'm looking for. If I lose, I lose. If I don't, I'll make a lot of money. So, yeah, just wanted to come on here and vent really quickly. Do want to show you guys Microsoft as well, because it does look pretty good for like AMD version 2. Just like I said, I don't see a lower gap that really kind of gives away where this can come to, but we do have a lower distributive range that I want to talk about. So we'll look at that really quickly. Then I'm going to jump off of here, guys. I didn't want to make this too long. Obviously, I wanted to kind of do a little bit of a vent session, go over charts, things like that, kind of a preliminary Sunday scan. But yeah, let's jump into that real quick. All right, guys, I don't really talk about like XLE or energy for the most part, but whenever I do, I feel like I don't miss. So I think it's finally time to join in on the rotation, right? We talked about the rebalance and kind of how things have been moving and been structurally shifted from tech to more risk-on assets, right, where we saw it fluctuating into crypto names, into semis, and then as those started to reach peaks and people kind of got uncomfortable chasing those highs, people either continued to chase them or they went into kind of risk-off assets into oil, which mainly was the big one, but we saw XLF be another big, function as well. But really, right, we have a really good setup here on Oxy, in my opinion. I've been looking at ZOM for quite some time, but the chart hasn't been as clean, right? We did have a small little consolidated low here, right around 105. This could have been considered kind of like your weekly slash daily resistance here. Wasn't super clear. We had like major consolidation just underneath this, so it was pretty hard to get in. You obviously had to swing with some dated contracts and just kind of like not look at it and be okay with the quick drawdowns, the pushes up, because I'm sure people probably went 10, 15% on contracts down 20, 15, 30%, and then kind of back up. And really, you just had to stomach that until you broke above. But now we're getting pretty close to this like 113 weekly level, which is right around here. And then obviously there's a gap fill here as well. Now, you know, you could argue that you could potentially get in here off this high volume candle. I wouldn't, right? Obviously, just because it looks like a shooting star. If it is to pull back, I would assume it pulls back and retests the creek here, which would be this this major resistance that broke out and never really got retested. And then maybe it starts to build structure back up. But I think there's a way better chart here. And you guys might have saw it earlier. It's Oxy, right? Oxy, kind of the same thing where we had this big breakout that occurred after earnings, and then we had that same consolidation, but this really built out a nice structure. We had daily consistent higher lows and then incremental higher highs, and then we kind of got like this ascending triangle breakout over 61.94. Now, why 61.94 important, right? Just structurally, it hits our lower high, right? Lower high, sold off, and then started to build back up towards that level. We had, a 3-bar pattern breakout for on increased volume for the break over this lower high. So this would be our break of structure, and you guys can just see on the weekly how nice this looks, right? All I would really be looking for at this point is just kind of a pullback on the 61.94. If we use XLE as kind of like our guiding hand, right? This kind of does look like it could get that pullback, especially with ZOM's daily print as well. Maybe just a light pullback on XLE to fill this gap here, right? Something like that. I would have alerts set. Let's get you guys an exact price really quickly as well. So 89.72 to 89.32, just a small pullback. If it can hold here, I would be looking for that Oxy long, right? Oxy, good opportunity too. If you guys remember, ZOM's chart doesn't have much more room to fill that gap to the upside, whereas Oxy has plenty of room, especially if we can pull back to 61.94, kind of hold, and then we see a re-rally back in XLE. That's a $3.20 move to fill the 65 gap. It's about a 5% move on the underlying. I really like kind of dated contracts with these. Remember, these move really well, especially with the rotation. We're seeing big money enter, so we are seeing high volume moves, which obviously are really lucrative for options contracts. And this isn't an active sequence breakout over the 61 spot. So I'd really just be, kind of looking for somewhere in like May, even June contracts would be fantastic for the $65 call. They're a little bit expensive. Let me pull up how much they are really quickly. Let's see. Sorry guys, I'm pulling this up live really quickly to see what we got. Oxy. It's not loading, so I'll just go ahead and put this in the weekly scan. But Oxy, really good chart here. I've just kind of been waiting for this to set up, but really clean break of structure. Pull back 61.94. I'll look for 65 calls. I for sure want to get into like May or June contracts for those $65 calls. Just play it safe and just pepper in pretty heavy. Or I'd probably start with like 15 to 20 cons. Kind of, obviously if it kind of holds there and consolidates, I'll add like another 15 to 20 and try to get to around 50 contracts or so, and then ride it up to target. 64.23 would be trims for half, and then 65 would be the remainder. But really nice chart here, especially with that given that sector rotation and kind of the money now trickling. And as we start to see semis pull back even more, I assume we're going to see more and more money flock to these names here. So really like the setup here on Oxy. Okay guys, I don't really want to overdo this, but Microsoft, another big one here. Really seeing distribution, right? Same schematic, if you will, as AMD. I already touched on this in the last video, but really just looking for a break under 415 here. This does look like a potential candle trap. I just want to note that really quickly, where we have, the fake breakout over this high here obviously is closing back under on high volume. But part of that volume, we have to account for it being that wick there that kind of broke underneath this initial earnings candle high, which is our source and draw of liquidity. It's the gap from here where we had a gap back up, right? Rejected, higher low, pushed back up, rejected, sold off, right? So big focal point off this 415 level. What do we end up doing? Breakout over the high, failed underneath, retested it, sold, tagged 415, and we pulled down to this 412 level. I would really like to see this kind of break under 415 again and retest it on a lower time frame, right, and then make its way down. I would say to this small gap here, right. We're looking in for these distributions, right. We're looking for it to return back to the lower extreme of this range down here. Remember, I said AMD is my favorite because AMD is just so damn simple, right? Very, very simple, where we consider this whole range here kind of our UTAD. Once we break back into this range here, right, which would be this whole zone, right, you guys can see how nicely our placement is, where we have this very, very clean gap at the bottom of our distribution range, or the lower extreme, and it makes it very easy to have a simple target, right? Beautiful, beautiful chart here. That's why it's my favorite. Whereas Microsoft, right, it's kind of its early stages or its infancy stages. It still has that potential to do what AMD did, where it breaks out pretty hard, right? Kind of gives us a fake break, kind of comes here, lower high, something like that, and we probably come back down. I'm just kind of speculating here. I don't want to go too deep into it, but I do like it under 415 if it can kind of break down a little further. Sorry, I keep hiccuping. I think it pulls down to maybe not the lower extreme, but pretty close, right? We have an unfilled daily gap here. If we go to like the hourly, you guys will be able to see this a little bit better without extended hours on. Right, really nice potential here. I'm not, I just noticed this too. I'm not much of a big pattern trader guy, but you guys should be able to kind of identify this, where we have a left shoulder, a head, and what do we have here? Right shoulder kind of forming out as well. So I'm pretty, I would say I'm pretty comfortably short in this zone here, right? Very, very simple from 415 to 420.82. Of course, right, if we end up catching a short here off this 420 spot, we end up risking our high here at like whatever the high would be, right? We end up kind of pulling this down and getting the exact gap fill. That's not bad, right? I mean, that's a 2.19 R. Obviously with options, it would differentiate. It would probably be a little bit higher, just depending on volume and some of the other, variables that are tied into the Greeks. But this is a good trade. I wouldn't mind this. If you get the break here, right, we end up taking the 415 short down to that spot. Risk would obviously change, and you'd be looking for that. So that's still around a 2R. So either way, I think this is a good shot for a short here. Obviously, it's a little bit early, in terms of the schematic itself, but setting up a really nice head and shoulders here off of the two short spots that I like, 420.82 to 415.32. Really clean chart. So I just wanted to add this in there really quickly to tie it into that AMD clip that I showed you guys earlier, where I said AMD and Microsoft are my focal points for shorts. So keep your eyes on this one. I do think this plays out really nicely down to that. And I didn't even give you guys a damn level. What am I doing? What am I doing? It would be 405. So down to 405. Maybe next week or two, we can look for a big short here for literally 405 puts. So for those of you guys that are kind of into swings, longer dated stuff, I do think we have a good opportunity here on Shop. Nobody's talking about this. I'll just say that first. But I guess to kind of go into the backstory of my levels here and kind of give you guys context as well. You guys know I like these plays a lot, where we have really solid companies that report earnings that have double beats, right, and that actually have a good book and a good business model that will sell off. And the reason they're selling off isn't because of people don't like what they hear. Sometimes they like what they hear, but what ends up happening is we have year-long, multi-year long consolidations that are actually accumulations that are developing way prior, where inventory is collected. We'll end up seeing multiple markup phases if you guys are familiar with kind of Wyckoff and how this works. And then what will end up happening, right, is eventually we'll end up coming towards highs, right, where big money deems it's a good area to sell at. And going into these earning calls, they'll sell before they even hear what they like. And if they do hear what they like, they'll basically rebuy what they just sold, right? Hence the rewash. I think this is a good opportunity to buy pretty much off of the earnings sell-off, right? Earnings sell-off was here on February 13th. As you guys can see, double beat. If you guys want to go look into their balance sheets and pretty much anything they talked about, you guys can go do that if you guys want to look at it as an investment opportunity. That's up to you. This is just my own thing. And really, I kind of like the reclaim of the level, right? We ended up selling off underneath the earnings day low, right? We ended up breaking under, we retested it, we sold off again for a very minimal lower low. We pushed back above, rejected on higher volume, but still relatively low. We had a higher low, we broke above. Now we're pulling back for a secondary higher low on volume divergence, right? You guys should be able to see this here. If I click the right thing. I don't know why my stuff still stays black. I don't know why it does that. But volume divergence here. We have a low volume pullback for our secondary higher low, and we've already kind of developed the low here, right? The second green line here at 71.43 that you guys will see, I'll show you exactly what that is, right? This was honestly our break of structure, right? We ended up having the consolidation that I spoke of. We had our breakout pullback. This was also kind of like our EMA crossback, which occurred here, but this was relatively where it started, right? We had the breakout, pullback, EMAs had crossed, breakout, pullback, breakout, pullback, right? And then this ended up kind of pulling back to the initial breakout zone, as you guys can see, and then it started to break back out, pullback, right? It's kind of done the same thing over and over and over. Now, the big thing is when this broke out here, it created this kind of baseline high. And this was the high that needed to be broken. It pulled back to basically where this consolidation started, and then we got a big mark up here, as you guys can see, and now it pulled back multiple times, 1, 2, and then here, right, we can consider this our weekly higher low. This is a beautiful spot, I think, to kind of get a continuation move back towards the highs here. I didn't want to dive into this too much, but we'll just jump into it, I guess. But here, what day was it? Yeah, over here. We actually ended up having dark pool prints that are still here. It's about 13.95. I'll have to find the number. I can post it for you guys. Where's it at? Each one of these prints is about 13.95 to 17 million, right? So a good amount of money. So I mean, total cumulative, it's around 30 million. Sitting at 87.99 to 90.55. I assume it's built more. I'll have to take a look, but I marked these out. But these are clear as cut, clear as day, if you will. Dark pool prints. We have one here, and then we have one here. Right? These were printed the day after earnings, and really, actually, was it the day after earnings? Yeah, it was the day after earnings. And hasn't been tagged yet. So I'm really looking to kind of start a position here, right? I've been waiting for this one to develop. I haven't really talked much about this because I do know people kind of watch the things I'm doing. And I've just been waiting for this to develop and close above this 77 level, right? Once we got this secondary higher low, and remember we talked about this just a couple seconds ago. We have a low, higher low, and then a very meaningful higher low in my opinion here. Just would risk pretty much 77.01. If you guys want to be a little bit more risk tolerant for this, you guys can risk the low at like 71.43. I don't think it has a reason to come back down to that spot, but I would be looking at July 19th $90 calls. Reason for that, I think this comes all the way back up and fills the gap, right? We should probably hit this first dark pool print at 87, or yeah, basically 88. The gap fills at 88.98, so we'll just round that to 89. And then there's that final dark pool print at 90.55. I think it fills the entirety of this gap and goes a little bit higher, but really good swing here. I know a lot of people always ask me, can we get more swings? Can we get more swings? Stuff that has more time on it. If there's going to be one of them, I think this is the one. So this is going to be on the focus list kind of moving forward longer term. I think this one's going to be a big win. If you guys remember the last time I talked about a chart that I was really confident in terms of a major swing was SQ. SQ ended up being a big win. So going to be looking at this one over the next several weeks. I'll probably start this next week just to get some light exposure on it with probably like 4 contracts, 5 contracts. These are pretty expensive. So the July 19th are sitting at 4.85 to 4.95. So maybe even just, for smaller accounts, one would be a good amount, and just kind of hold that till target if you can. But yeah, this is a good chart here in my opinion that nobody's talking about. So just keep your eyes on this one. Okay, Celsius is actually a company I like a lot. I'm not a big fan of energy drinks, but I do like these guys. I think this is a good fundamental company. And it kind of shows, right, just with the growth that we've seen with the name. But really, same structure, same ideology behind a lot of the trades. But this isn't necessarily a peg setup, right? This is more so earnings happened. We ended up opening lower than we actually closed, and then we have rallied the whole day and created almost like an intraday peg, right? And from there, just developed higher lows. I don't see why this does, why this stops, especially with the low volume here near the highs. We haven't really seen any reason for this to distribute, right? This is already near the top, so I think this just sees continual, kind of pushes higher and keeps getting incremental higher highs until we see like a footprint candle where we see sellers step in, and at that point it's gas off the pedal. You'll wait for a pullback towards a weekly spot in terms of liquidity or some kind of gap, things like that. That's kind of the reason for the long here in the first place, right? We ended up having a move up. We had a nice daily candle that kind of gave us indication of a sell despite the volume, and it pulled back and filled the gap here, right? I would be looking for 419, pretty much 100 calls. It's as simple as that. That would be essentially the weekly high here. Why does it do this? Right, 99.62. Let me take a look at premiums really quickly. So CLH 419, 100 calls are only 3.65, so not bad, right? I think this is a good spot to take it from. Risk, if you guys wanted to get like a risk calculator or something like that, you probably just risk this area here at 85. Right, pretty good spot. Or if you wanted to be a little bit more risk on, you could take 82.75. Should obviously you would have your answer at 91. If it breaks under, I'd more than likely just close this. But really decent chart here. I wouldn't say this is A plus. I would see this as like a B to a B plus. I think there's some better setups out there. But really good opportunity here on Celsius. I did put this on Twitter as well. I feel like this is just a pretty basic chart. Another one that I wanted to kind of include here is Myrna again. Super clean name. Right? I mean, we missed out on this one. At least I did. With this this breakout here, I remember I talked about this. It's just a slip up. It happens to everybody. But I took Apple at the same time as I was supposed to take this, and Apple obviously took a lot of my attention. But clean breakout. Just so much strength in this. This ended up having, massive move, guys. This was a big 18% move, $18. And then obviously it almost tagged the external high here at 115, but now we're starting to get like an internal external range to work with, if you guys can't tell, which would be like, this spot here. And obviously it lines up pretty nicely with the gap here. If we just kind of pull this across, you guys should be able to see that. A lot of room to get towards that downside gap, so I'm not too worried about it just yet. But overall, right, this is almost like SQ, right? If you guys should have like a photographic memory almost. That's how you should start looking at charts, where we had internal, external, right? And we broke out, pulled back, tested the internal. What did we do? Had a massive breakout to the the upside, where a lot of buyers were able to get really good unloads here through the external high, and they got some excess damage as well. Same exact thing I think is setting up here on Myrna, where we could have, we have our internal high, external high. We broke out, we didn't necessarily tag out this level yet. So now the pullback here is on low volume, right? And then the high volume starts to kick in with the hammer off the internal high. I think this has a potential for, a big push back up towards this spot here. So I'll be watching this very closely. The Pfizer's also a candidate as well. Pfizer's a little bit different though, where we're flagging underneath this resistance here, which is the initial gap fill. I don't like it as much in the sense that there's higher volume coming here from this kind of like gravestone doji type candle. But this is also something to keep your eyes on. But I do like Myrna, just in the sense that we are retesting the internal high. It reminds me a ton of SQ. There is that potential that we get like an outlier move and it breaks out higher than the 115.68 external high. So definitely another name to keep your eyes on. And that's really it, guys. That's really it. So if we just kind of recap everything, AMD is a big focal point for me. For the short side, Microsoft, big short for me as well. Not as big as AMD, but just something to keep your eyes on. So that's two. I'll be looking at Apple long, Oxy long, and then Shop, and then obviously Myrna be another big one here. So those are going to be pretty much the major focuses for me. Nothing super crazy. But yeah, just wanted to kind of show everybody kind of what I'm looking at. Like I said, it's going to be main focus on AMD and Apple. Oxy, Microsoft are going to be supplementary. Shop's a really good long-term swing in my opinion. And then, yeah, of course, Myrna potential here. And that's really it. Am I missing one? I feel like I just covered one and I completely boofed and forgot about it. Got to be down here, isn't it? Oh yeah, Celsius. Celsius is a good one too. I don't know why. I don't really chart Celsius, so and I'd rather be raw with you guys and just be honest. Like, yeah, I forget about some of the stuff I cover, especially if I don't trade it a lot. But yeah, Celsius could be a good one. So another recap: AMD, Microsoft short, Apple, Oxy long, Shop, and then like I would say Celsius, Myrna are all kind of on the back end. I don't really trade Celsius a lot, so I don't know how this trades, how it kind of moves, what premiums are like when they end up getting a move. But yeah, those would be the three that are kind of on the back end of things. So yeah, that's going to be pretty much it, guys. And then obviously we'll see how things open up on Monday, and then as things trade on Monday, we have FOMC next week, so I'm expecting Monday to be pretty much nothing in terms of volume and seeing any kind of movement in the stock market. Tuesday probably same thing, and then Wednesday is when we'll have FOMC. So Monday, Tuesday, I'm expecting like an accumulation or minor distribution back towards an accumulation, and then we'll see what happens from there. But overall, I got a couple of names on watch. We'll just see how things develop next week. So appreciate your guys' time, and we'll get ready for next week. It'll be a volatile one. Just play it safe, play it smart, and I'll take care of you guys for the rest of the way. See you guys.